All right, coming to you live from HousingWire Annual in our brand new digital newsroom integrated into the event. I've got William Schoeffler, who's the CEO and founder of Hitch. William, could you just give a 30-second introduction of yourself and Hitch?
No, thank you. Hitch is a digital home equity lender, so we focus on just doing HELOCs and HELOANs. So we're just a specialized lender helping homeowners tap their home equity, and we focus on basically trying to get the process down to 7 days from application phase.
And are you enabling other lenders to provide this product, or are you direct to the end consumer?
We are direct to consumer. We are working on basically some partnerships with other lenders to white label our technology right now. But right now, our primary customers are direct to consumer retailers.
Got it. And what got you excited about the home equity space? You could have picked a million different areas to launch a business in. Why home equity?
Home equity is super exciting just because of the technology you can build in the space in terms of true automation. So if you look at, we actually over the summer went to UWM's headquarters, amazing campus, 8,000 people in a building. And mortgage is really human intensive. It takes a lot of underwriters, processors. What's super exciting about HELOCs is that it's a specialty portfolio product that allows you to actually craft your own underwriting guidelines and guidelines that you can actually fully automate. And so I'd say it's more analogous to the personal loan industry where they were able to fully leverage automation. And for us, we view ourselves the biggest competitor as the unsecured personal loans and credit cards. Consumers have just drafted towards those products because they're so easy. You connect your bank account, you get them the next day. We want to bring that same experience, but do it so consumers can borrow more money at lower interest rates and over longer periods of time.
So why did you start with the line of credit home equity product as opposed to the other home equity products?
So the reason for HELOCs is because it's an open-end line of credit. And so you don't have a lot of the traditional mortgage regulation that applies to it, such as ATR and TILA. And so basically it allows you to actually get the closing period down to 5 days, as opposed to if it's a close end, it takes you on average 2 weeks.
So we talked a little bit in our prep session about shared equity model.
Yes.
There's a lot of buzz around them. We're not sure if it's going to work or not. What's your perspective on shared equity?
It's a super fascinating model, and I've followed a lot of the originators. And so recently the news is that Unlock did their first rated securitization. And so the industry's had a lot of fits and starts over the last 10 years. And the biggest issue has been investor demand in the space. It's waxed and waned. The hope that these originators have, and they tell me, is that now that it's a rated securitization, that they can actually have institutional funds that will invest. And so what I've learned about the space is that there's a large swath of customers who can't get HELOCs, for example. They can't qualify. Maybe they have some challenged credit. And so these consumers are very hungry for capital. And so for those consumers, it is a great product. It requires a lot of explainability, and so that has been the big issue, is that it's a home option agreement is a very complicated product to understand, and so you need that counsel of a loan officer. But there is a lot of consumer demand to actually tap into your equity. So I'm excited about these companies and their prospects.
All right, interesting. All right, so I imagine you have a growth strategy for the rest of this year in 2024. Tell us a little bit about that growth strategy.
So the pillar for us is basically going into 2024, working with top originators who basically have a lot of consumers that they're working on for either refis, and they just don't want to refi at the end of the day. So we want to be that partner for these originators where they can send them to us, and we can actually help these consumers get a HELOC or HELOAN. And a lot of these originators don't want to offer our product just because it doesn't fit into their model. It's not profitable for them to originate. And so we want to be that partner that helps fulfill that consumer demand and actually be able to give that consumer capital.
William, thanks so much. Great to chat with you.
Thank you.
Thank you so much for watching this episode of 10 Minute Talks. If you want to stay up to date on all things housing, don't forget to subscribe to the channel and drop a like and a comment below if you enjoyed this video.